Hello everyone, welcome to the Equity Chronicles and welcome to the weekly wrap up of market. Today we'll be analyzing what happened over this weekend, and this is a conclusion of the overall weekend mayhem which happened in market. We'll be seeing, is there any respite for the bulls, is there any hope for the bulls, or the market is still under the control of the bears. And apart from that, we'll be analyzing some sectors which are showing strength and which is still holding up in the market. So we'll be quickly analyzing first Nifty, then Bank Nifty, Nifty 500, and then mid cap, small cap, micro cap, and few sectors which is still holding up, which is strong. I'm not going in detail of other sectors which are showing which is very weak. If you want to know anything about any sector, or if you are holding any stocks in that sector, and if you want to know, you can just comment down. I'll try my best to analyze it and I'll let you know. So Nifty is still trading in this ascending triangle pattern. You can call this a wedge also. Luckily, the good thing is that this support is not broken yet, and the recent low is not even broken. It is again trading in this range, and this is something which you need to watch, whether it is going to break down from this base or break out of this base. And again, market looks very weak. There is no respite. If you switch to weekly time frame, again not a very good candle. Monthly time frame, if you take look at the fall, 1 2 3 4 candles. So there is no respite, no recovery, no in short term it looks really bad as of now. Wait and watch market, as I always say. Nothing major happened, and previously it formed a base before base. Now it is forming a base below this. So this base is broken down and it's consolidating, and just this base might break down or break up. That is something which we need to watch. And all eyes on budget. If there's something good in this budget, we might get a relief rally. Government should do something really good to push the consumption, but I really don't think we'll be getting a lot of goodies in this budget. So it will be painful. Recovery will be really difficult. I'm expecting something like this consolidation for a very long time, maybe this year second half. Even the previous video I said this. So till that time we need to wait and watch. No new trade in my opinion. If you're an experienced trader, then you can look for good sectors and some good stocks which are breaking out of a long base, and if there is not much of a resistance to the left, you can watch out for such stocks. Beginners don't get into FOMO, so we might see something like this soon in anticipation of the budget. So anything towards this 200 DMA, if you have any losers, it's a good time to cut the losers, because I don't think this 200 DMA is going to taken out very soon, or else you'll have to wait and see if this point is taken out 25 to 100. And ultra safe traders, my suggestion is let it close below 25k. You might miss out on good opportunities, but it's always better to protect your capital, and then it's always better to preserve your capital for a good trade. You might miss this much move, but again another 8%, I think, close to another 6-7%, or maybe it is creating another all-time high. You will get a good trade. You might not be able to catch the proper bottom, and there is no follow through also. I'll try to come up with a follow through market bottoming out video. There is concept of lot of good traders, how we can catch a market bottom, but it's not easy as it sounds. People make it sound easy, that you can find the bottom of the market, but it's very difficult. William O'Neill's concept is there, bottoming out market, and we need to watch out for follow through. I'll try to come up with a tutorial for that. You need to watch out the space. And this death cross is formed. Death cross, you must be coming across this in YouTube, a lot of people in social media, a lot of people will be talking about death cross happening in daily time frame, and big correction coming and all. You can't predict that. You don't know whether correction is coming or not, or if it's going to be a recovery. There is absolutely no idea. So don't predict. Don't try to predict. Don't enter in FOMO. If market is showing any signs of strength, don't enter in FOMO. This might be a bull trap is always there. There might be some short covering, and it might reach here and then come down. So the structure is still the same. It hasn't changed. Okay, so let's wait for the structure to stay, at least change. Let it form higher high, higher lows. Till that time, just wait patiently. We will get good trades. Let the market settle down. We'll switch to Bank Nifty. Bank Nifty again, very similar pattern, trading in this range. Weekly also looks very bad, trading below all major key DMAs. It's keep on rejecting from this 49,500 region. It also looks very, very bad. 500 again, similarly, one base form broken down, another base form broken down. Let's wait whether it is breaking down of this and breaking out. If it is breaking down, if you want to trade, you can look for some short selling opportunities here. Even in Nifty also, if this base is broken down, you can try for shorting opportunities. But the risk is that this channel support is there. See, it is taking support. 1, 2, even third time also it took support. So maybe a little bit up and then come down. If you're shorting from this point, it might act as a support. That is something which you need to be careful about. And if you're a beginner, stay away from this put call options and all those things. And if you're a beginner, don't even think of shorting the market. If you're an experienced trader, then only do all those things. To be active in the market and to actively kill the bottom, you can do something like this. So Bank Nifty we covered, nothing much to cover because it's bearish, nothing has changed, the structure is still the same. 500 also, this base is formed. Let's see if it is breaking down or breaking out. If it's breaking down, it's bad news again. 19,650 testing will be, the probability will increase. Mid cap also, no sign of recovery, again forming a base. We need to watch out this base, what is happening, breaking out or breaking down. Based on that, we need to take action. And again, it is in the verge of forming a death cross in mid cap. Small cap also same, broken out of this base and just came out. It's kind of a retest and it's coming down a lot. It looks bad actually. Nifty small cap looks very bad. So the correction in Nifty small, mid cap and micro cap can come, and that if this correction is going to come, it's going to be really, really difficult on your portfolio. So you need to, this is the main reason, do not take any trades. And if somebody is taken trade from this point, you should have cut out that loss at the earliest time. Now it's really late. I don't know if somebody is suffering, somebody is having a very tough time, somebody is having a very bad portfolio, very negative portfolio. I have no clue. You shouldn't have done that. The importance of risk management is clearly evident. If you didn't, if you take a trade from here and if you didn't cut your losses, you would have been in a huge loss, and then your money will be stuck. And then micro cap is again relatively somewhat better compared to any other mid cap and even small cap. But this point is broken down, then there might be some panic selling. So no new trades. Hold on with new trades. I'll update you guys if the structure is changing, and if you want to take trades at that time, trade. And if you are experienced trader, you can nibble around the market in small quantity. And even if you're a beginner and if you really wanted to trade and learn, this is the best time to learn. So trade in very small quantity. Be ultra conservative, trade in very small quantity, and this is the best time to learn. Bear market is the best time to learn. 2020 people came into the market and they thought that it's very easy to make money in the market because you saw only one directional move in Nifty and even across the broader market. But at time, this is market, sometimes it's very difficult and it will test your patience. In order to make money, you need to be really smart. You should know when to take a trade. You should know when to completely sit on the sidelines, and you should know when you have to go full on with cash. And let's move to another 4 more sector which I think is in much better shape. I'm not going through all the sectors, I'm just taking only this 4 sector which I found as doing much better. I can make a separate video for this 4 sectors and some good stocks in that, and we can do a technical analysis of those good stocks. If you want to try, you can try stocks in that, or you can go for the ETF way. There are ETFs for all those I believe, yes, pharma, IT, and then healthcare. I think ETFs are there. You can try in ETFs if you're a beginner, or if you know how to manage your risk, you can check for good stocks. I'll try to find out good stocks and post it in my X and my Telegram. So if you want real time update, you can follow me on X or even my Telegram. So let's move to IT. IT, it is in much better shape. It just broke out of this base, and then it moved up into this base, and it's just very close to 50 DMA, and 200 DMA is like way below. It is trading well above 200 DMA, and there is no sign of death cross. So this is holding up. Usually this happens when market is correcting in a big way. These are called defensive sector. People usually take cover in this kind of sectors and this kind of stocks. So CNX IT, that is Nifty IT, it's in a very good shape. Maybe you can say that it is forming a channel like this. Yeah, and let's see if it is breaking out of this channel. Okay, and watch all the stocks in this IT, all the components in this sector, and if you find anything good opportunity, you can try in small quantity. Pharma, again, is just forming a base around here, and it is right below 50 DMA and above 200 DMA, and again forming a base. So watch out if this base is taken out, or if it is breaking down out of 200 DMA. If it is breaking below 200 DMA, then it's bearish. It's not bad. Don't even think of this sector, but it is holding up as of now. Nifty India Digital, there are some lot of new names listed in this India Digital Index. Again, forming a base around here, contracting here, and taking support as 200 DMA. Let's see if it is going up or going below 200 DMA. If it is going below 200 DMA, even if you take any trades, it's better to close those trades. And quickly, and without any wasting any time, I'm moving to Nifty Healthcare. This is also another defensive sector. It's forming a base. Let's see if it is breaking out and closing above 50 DMA or below 200 DMA. So these 4 sectors, IT, pharma, India Digital, Nifty Healthcare, is in much better shape compared to any other sector. So if you want to be defensive, if you want to participate without a lot of risk, you can participate in these 4 sectors, even in ETFs or even in good stocks. If you find good stock, if you are good at this, you can just check the components, what all stocks are listed in this, and find your trade. But again, reiterating the point, this is not the time to bet big. Don't bet big. Be very conservative, be ultra conservative. We don't know what is going to happen. I am not telling that Nifty is going to correct a lot from here, and I am not telling that Nifty is going to take a V-shaped recovery and form a all-time high. We just don't know. I am expecting something like we'll be inching down slowly to somewhere around to this points. But that will be a slow correction. Okay, I don't think sudden moves could come, but I don't know. I might be wrong completely. There might be sudden down moves, and we need to really reevaluate things after the budget. Once the budget is over, we'll get to know what is going to happen in the market. So till that time, if you are a conservative trader, wait for budget to take any trades. Don't take any trades at all. And if you are ultra conservative and safe trader, wait for at least this point to be taken out, and then let it retest, and let the market structure go like this. At least in 1 hour time frame, if you are seeing this kind of structure, then only you go behind it. Otherwise, be ultra conservative. Try to learn. There are a lot of books available. Try to learn about market. This is the best time to learn, because market already corrected. what is the correction rate? I think it's corrected around 12 to 13%, and this is good. Market is like resetting. There is a lot of valuation concern. Still it is there. Still the fourth. Still the bubble is there, and I wouldn't call this even a correction. This is just a normal, small correction. You will enter bear territory. I'll be bearish below this. That is a good 20%, and I'll be bearish below this. Till that time I'm bullish. But don't trade based on any tips, or don't trade based on anyone's advice. Do your due diligence. It's your hard-earned money. Don't lose it. So I'll come up with the death cross and 200 DMA analysis. I have found something interesting, and then I'll be coming up with some good stocks which fell less from the top, and this sector I'll be doing a separate video on the sectors, and if I come across a good structure stocks, I'll post that as well. Meanwhile, what you could do is please subscribe to my channel, and follow us on Telegram and X for real-time updates, because sometime what happens is that I'll get an alert on a trade and I won't be able to post it in YouTube. So if you are a serious trader, if you want to learn, then join our Telegram channel, and X, follow us on X. Let's learn together, and we'll come up with market updates tomorrow, and weekly wrap up I'll do it on next weekend, probably next Saturday or Sunday. Till that time, take care guys, protect your capital, have a good time, stay safe.